Unit 10, structuring the finances. We're going to talk about the money here. None of the company's systems, processes, or people can accomplish the goals of the business plan unless its financial resources are properly aligned to support that plan. Managers must use a variety of financial statements to evaluate the company's fiscal condition and manage its money. Each of these statements, the balance sheet, the income or profit and loss statement, and cash flow statement captures information needed for prudent financial management. An important part of financial management is ensuring that resources are available when they are needed. This requires a cash management plan and wise forecasting to project capital expenditures and operating needs so that prudent decisions can be made about debt, equity, financing, or both. Although startup companies are usually very dependent on outside resources, every company relies to some degree on those relationships and needs a financing portfolio that makes a worthy pitch for the enterprise. A company prepares a general operating budget to indicate how the company intends to allocate its financial resources to support the company's business plan. Projections have to be realistic and based on quantifiable evidence for a budget to be a credible financial management tool. Income is supported primarily by the service revenue in a real estate company, which involves price-setting decisions and antitrust considerations. The expense side includes certain fixed expenses as well as variable expenses. Companies may prepare other types of budgets, including ones for designated profit centers. Prudent financial management also includes systems and processes that protect the money and financial data. Generally acceptable accounting principles establish standard or the proper methodology for managing financial ledgers to ensure data is accurate, as well as best practices and systems of checks and balances to prevent workplace fraud. Procedures typically address the following: who's permitted access to the ledgers or financial database? Who's permitted access to checkbooks and inventories of company assets? How are the accounts receivable and account payable functions handled? Who is permitted to approve disbursements and for what amounts? How's payroll handled? And lastly, what are the procedures for reconciling bank statements? These procedures are especially important in a real estate company because the principal broker is additionally responsible for other people's monies. State license laws may stipulate specific procedures for handling trust or escrow funds. So structuring a company's finances is a function of aligning its resources in the most cost-efficient ways to accomplish the company's business plan. And so as you read through Unit 10, I want you to think about this. What kind of structure, what kind of finance structuring do you see yourself working in? And essentially this means putting the right amount of money in the right place at the right time. So budgeting. Think through this as you read through Unit 10. This is the meat and potatoes of Unit 10. This is, to me, the nervous part when you start having to address, okay, I have this goal, I have this dream, this is what I want to do, but how am I going to pay for it? So I hope you enjoy this unit, and good luck on your quiz.